Welcome back to TechEyeSpy, where we break down the companies shaping the next decade of technology, and we do it with the same structured, forensic approach found in the TechEyeSpy book series, published by Rhubarb Bridge Publishing, available now on Amazon and all good bookstores. If you want the deeper dives, the case studies, the Harvard-style references, and the extended sector maps, the books are where you go to turn today's curiosity into tomorrow's investment edge. Today we are looking at a company that has quietly become one of the most interesting frontier players in the semiconductor world. A company with a passionate following, a credible technology, and a market that is more desperate for innovation than almost any other part of the chip stack. This is Weebit Nano, an Australian-listed but Israeli-engineered memory company working on resistive RAM, a potential successor to the aging flash technologies that have powered the digital era for the last 20 years. This episode matters because memory is the real bottleneck in modern computing. It shapes everything from edge devices to automotive microcontrollers to the future of AI inference. And every time a new memory contender steps up, the market holds its breath, because whoever cracks this problem does not just win revenue, they reshape architecture across entire industries. Weebit Nano claims it can do exactly that. Their ReRAM technology promises faster switching, lower energy, higher endurance, and seamless integration into existing semiconductor manufacturing processes. They are already partnered with real foundries, already showing working arrays, and already deep into the embedded systems market, where reliability and efficiency rule every design decision. But can they scale it? Can a young, ambitious company become a viable alternative to flash? Or will the industry's gravitation toward MRAM and other emerging memories leave Weebit as just another promising technology that never crossed into volume production? In the next chapters, we will explore their strengths, their weaknesses, their opportunities, and their threats. And by the end, you will know whether Weebit Nano deserves a place on the TechEyeSpy radar in 2025 and beyond. Strengths. Weebit Nano's greatest strength is that it sits on a genuinely differentiated memory technology at exactly the moment the semiconductor world is running out of runway. Flash is approaching its physical limits. DRAM scaling is slowing down, and the entire industry is searching for alternative, non-volatile memories that do not require new fabs, exotic materials, or billion-dollar process revisions. Weebit's ReRAM fits neatly into that gap. It uses simple oxide materials. It relies on standard CMOS flows, and foundries can integrate it without ripping apart their tooling. In a sector that lives or dies by compatibility with existing infrastructure, that is a powerful advantage. The next strength is fabrication credibility. Many emerging memory stories fade because they never make it into a real fab. Weebit crossed that barrier early. Their collaboration with Skywater Technology was more than a symbolic milestone. It demonstrated the technology's manufacturability in a United States foundry with established commercial clients. That single achievement separates Weebit from most research stage competitors and provides the kind of external validation investors look for in semiconductor plays. Then there is performance. ReRAM has inherent physical behaviors that solve pain points flash can no longer address. It offers faster switching, lower program voltages, greater endurance, and better resistance to radiation and temperature extremes. That makes it especially relevant for automotive, aerospace, industrial IoT, and edge inference. These are markets where you cannot simply throw more power or cooling at the problem. You need robustness at the materials level, and Weebit's technology provides exactly that. Commercial simplicity adds another layer of strength. Weebit Nano is not trying to build its own fabs. It is not chasing the capital-intensive path that crippled many memory startups in previous decades. Instead, it operates with a licensing model. The company provides the IP, the process integration knowledge, and the support, allowing foundries and OEMs to adopt ReRAM with minimal disruption. This model is scalable, lean, and realistic for a company of their size. They also benefit from timing. Automotive manufacturers are redesigning their entire electronic architecture for the software-defined car. Millions of microcontrollers will eventually require higher reliability, non-volatile memory, and flash is increasingly strained by the endurance demands of over-the-air updates and real-time processing. If ReRAM becomes the new standard in MCUs and automotive control units, Weebit is positioned to become a foundational supplier rather than a niche specialist. Finally, Weebit Nano operates within a strong talent corridor. Israel has produced some of the most influential semiconductor teams in the world, from Mobileye to Tower Semiconductor to Mellanox. This gives Weebit access to engineering talent, fabrication expertise, and a culture used to commercializing deep tech at scale. It is not just a company with a good idea. It is a company built within a national ecosystem that understands how to move advanced hardware into market. Weaknesses: for all its promise, Weebit Nano remains constrained by the classic semiconductor startup problem. The long, unforgiving march from working prototypes to sustained commercial orders. Memory technology is slow to adopt precisely because every component must run flawlessly for years under extreme conditions. Even with strong early results, ReRAM is still competing against decades of engineering optimization invested into flash and MRAM. That means customers will move cautiously, validation cycles will be long, and any delay risks eroding momentum. The company's reliance on partner foundries is also a weakness. It keeps capital expenditure low, which is a strength, but it also puts the company at the mercy of each foundry's priorities. Skywater, for example, is a credible partner, but a comparatively small fabrication player. Larger fabs may be interested, but without firm production commitments, Weebit cannot force its technology into mainstream adoption. This creates a ceiling effect. They can sign integration agreements and produce demonstrators, but scaling relies entirely on other companies allocating line space, engineering resources, and marketing support. Competition presents another pressure point. MRAM is already commercially deployed in several embedded MCU families. It has the backing of companies with deep fabrication experience and established customer pipelines. Even if ReRAM is technically competitive, engineers often choose the familiar option when reliability is paramount. That inertia should not be underestimated. It will take significant performance proof and strong customer wins for Weebit to break through that gravitational pull. The company's financial structure also creates a vulnerability. As a pre-mass revenue business, in an industry with long development cycles, Weebit must manage investor expectations carefully. If timelines slip or adoption takes longer than expected, the share price can become volatile. That volatility can then affect the company's ability to raise capital at favorable valuations. Semiconductor history is full of promising memory companies that were technically strong but financially outpaced by the slow nature of market adoption. There is also the challenge of density scaling. Embedded ReRAM arrays are promising, but scaling to standalone high-density memory, the kind that competes with NAND or next-generation storage class architectures, is a very different technical challenge. It requires endurance, retention, uniformity, and lithographic compatibility at levels far beyond small embedded blocks. Moving into that arena is possible, and Weebit has stated interest, but the technical risk increases dramatically. Missing those performance targets could confine them to niche markets. And finally, the brand itself works both for and against them. Enthusiastic retail support gives the company visibility, particularly in Australia, but it can also create the perception of a cult stock. Institutional investors may hesitate until real revenue flows materialize and governance structures show stability. Until then, sentiment can swing sharply on news flow, influencing the company's cost of capital and its ability to plan long-term. Opportunities. Weebit Nano's opportunity base is unusually broad for a company of its size, and it starts with the embedded systems market. This is where ReRAM can win first and win fast. Microcontrollers, automotive ECUs, industrial IoT endpoints, and aerospace-grade electronics all require non-volatile memory that can survive heat, radiation, vibration, and constant write cycles. Flash is struggling under those conditions, and MRAM, while strong, remains expensive and process-heavy. ReRAM's ability to slot into existing CMOS flows gives Weebit a pathway into millions of units long before it needs to challenge higher density memory formats. The biggest single opportunity is the automotive transformation. Every modern car now contains microcontrollers that need to be updated, rewritten, and reprogrammed for safety systems, driver assistance features, and new infotainment architectures. Flash endurance is a bottleneck in that environment. If ReRAM proves more durable and easier to manufacture, automotive OEMs may shift entire families of MCUs toward it. A single design win in this space can scale into decade-long revenue streams because car electronics platforms evolve slowly and in large volumes. A parallel opportunity sits in aerospace and defense technology. These sectors live and die by radiation resistance and data retention under stress. ReRAM naturally handles this better than many memory formats, including NAND. As satellites shrink and constellations grow, the demand for lightweight, low-power, high-endurance embedded memory increases. If Weebit can prove its technology under radiation testing regimes, it may become a preferred choice for small satellite platforms and defense electronics. Another opportunity comes from the rise of edge AI. We are rapidly moving toward a world where intelligence is processed locally on devices rather than in the cloud. Those devices require memory that is low power, fast switching, and able to endure constant writes during model updates. ReRAM is well suited to this architecture, and companies in the sensor fusion and real-time inference markets are already exploring emerging memories as alternatives to DRAM and flash. Weebit could position itself as a foundational component for next-generation low-power inference hardware. The licensing model adds a different scale of opportunity. Unlike companies that must spend billions building fabs, Weebit can enter new markets by signing new partners. Every new foundry integration multiplies the possible customer base. If one Tier 2 fab adopts ReRAM, competitors may follow simply to avoid missing out on design wins. This allows Weebit to grow horizontally across the industry without the usual capital burden. A final, long-horizon opportunity lies in standalone memory. While extremely difficult, the companies that break into this market can transform into giants. Even a modest density standalone ReRAM chip could find a home in wearables, industrial controllers, or embedded AI accelerators. If the technology demonstrates reliable scaling, Weebit could eventually challenge lower density flash products, opening a revenue pool far larger than embedded licensing alone. Across all of these domains, the pattern is the same. The semiconductor world is hungry for alternatives. Flash is aging, DRAM scaling is slowing, new architectures are emerging, and Weebit sits on a technology that is ready at the exact moment the industry is searching for options. That timing is rare. Many small companies never see it. Weebit Nano does. Threats. The most immediate threat to Weebit Nano is the inertia of the semiconductor industry itself. Memory incumbents are notoriously hard to displace because they control the tooling, the supply chains, and the customer relationships. Even when a new technology performs well, it must outperform by a wide margin to justify integrating it into safety-critical products. Flash may be aging, but it is predictable. MRAM may be expensive, but it is understood. ReRAM must prove not only that it is better on paper, but that it is unquestionably reliable across millions of devices and billions of write cycles. Any uncertainty slows adoption, and slowing adoption kills momentum. Competition from MRAM is the pressure point that will not go away. Everspin and global foundries have already planted MRAM into commercial MCU lines. Western Digital, Samsung, and others continue to invest heavily in emerging memory research. Even if ReRAM is technically more elegant, MRAM has a head start in production. It is already shipping. Engineers who have used it before are more likely to use it again, and that familiarity is a threat Weebit cannot control. Another major threat is foundry dependency. SkyWater gives Weebit credibility, but it is only one fabrication partner, and a relatively small one. If SkyWater experiences financial strain, capacity issues, or technology pivots, Weebit feels the shock directly. Bigger foundries may eventually adopt ReRAM, but they will demand extraordinary proof and years of testing before moving customers to it. If those relationships take too long to form, Weebit risks drifting into a limbo where the technology is validated but not widely deployed. The financial risk is equally real. Emerging hardware companies rarely travel in straight lines. They move from milestone to milestone, each requiring capital, patience, and investor belief. If the share price becomes volatile, or if market sentiment turns against speculative tech stocks, Weebit could find itself raising money at the wrong time and on unfavorable terms. That in turn restricts engineering progress, which then delays commercial traction, which then reinforces the cycle. Semiconductor history is full of promising memory firms that ran out of runway before they ran out of innovation. Geopolitics presents a further layer of complexity. Israel's tech ecosystem is powerful, but regional instability can influence investor confidence, supply chain continuity, and strategic partnerships. Meanwhile, global chip policy is shifting toward domestic manufacturing requirements, export controls, and national security considerations. Any regulatory tightening around semiconductor IP, especially resistive memory structures that overlap with other nations' defense interests, could slow licensing and complicate cross-border collaboration. A final threat is density scaling failure. If ReRAM hits a wall at higher densities, the company becomes locked into embedded markets only. Those markets are valuable, but not transformative. The moment competitors demonstrate a superior roadmap for scaling, the narrative shifts. Investors recalibrate. OEM engineers reconsider. And Weebit risks being perceived not as a future memory contender, but as a niche embedded supplier. In short, the threats are not about the science. They are about the industry surrounding the science. Memory is a slow battlefield. It selects winners ruthlessly. And even the most elegant technologies can be outpaced if timing, partnerships, and capital do not align. Conclusion. Weebit Nano sits at that rare intersection where frontier science meets a genuine industrial need. Memory has become the quiet crisis of modern computing, the bottleneck throttling everything from AI inference to automotive electronics. While CPUs and GPUs collect the headlines, it is the unseen storage and memory layers that determine whether the next generation of devices can function at all. In that environment, any company offering a credible alternative to aging flash technology deserves serious attention. What makes Weebit interesting is that it has crossed the threshold that many emerging memory companies never reach. The technology works in real silicon. It runs inside a recognized US foundry. It demonstrates advantages that matter to engineers who build mission-critical systems. And the licensing model gives it a realistic pathway to revenue without the impossible capital burden of building a fabrication empire. But promise is not the same as inevitability. The industry moves slowly, and inertia is powerful. MRAM already occupies some of the conceptual space ReRAM wants to fill. Flash, for all its limitations, is deeply entrenched. Even with strong technical fundamentals, ReRAM must still survive years of validation and conservative decision-making. And Weebit Nano must manage its financial runway carefully while navigating an industry where time takes its toll on even the most compelling innovations. Yet for long-horizon investors, this is precisely the type of company that TechEyeSpy exists to highlight. A credible technology positioned at the right moment in the semiconductor cycle. A small cap with a loyal, highly technical following. And a story that could, under the right conditions, evolve from niche embedded licensing into broader memory markets with exponentially larger scale. Whether Weebit Nano becomes a key player in next-generation computing or remains a specialized embedded supplier will depend on the next few years of partnerships, production validation, and market adoption. But the fact that it is even in that conversation is notable. Most emerging tech firms never get that far. If you want to explore more deep dives like this, the TechEyeSpy books from Rhubarb Bridge Publishing are available now on Amazon, covering everything from space to quantum to fintech. They offer the extended narrative versions of what we explore here each day, with even more detail for readers who want to build conviction rather than speculation. Until next time, stay safe.